Thank you very much. It's a pleasure to be here. So I will first off just briefly introduce what good energy actually is, and then take you through why we think we're building a company with a lot of potential for growth, as well as one that could play quite an important part in the UK's overall response to climate change and to greening our energy grid and our homes. So who are we? Well, we've been around quite a long time actually. We've been around since the late 1990s, founded as one of the original challenger brands as the UK's energy supply market deregulated for the first time. And the original founding purpose was to raise some money both from investors and bill payers to get some renewable generation assets built onshore in the UK. Good Energy helped to repower the UK's first commercial wind farm, which is at Delabole in North Cornwall, for those of you who know the area, which I can guarantee is pretty windy. And the business developed from there. And subsequently, we really do three things. So we are an energy supplier, but we are a specialist energy supplier. We are, by most measures, the greenest energy supplier in the UK. We sell genuinely renewable, and I mean genuinely, as in I can show that it's backed by 100% renewable generation across the year, electricity to businesses and to domestic consumers. We sell domestic gas, again with a green element to it. 10% of the gas we sell is biogas injected into the gas grid for that. So for consumers who want to know that their bills are genuinely going towards renewable power, that's what we do. Our investment and the focus of our future growth, we think, is around generation. So we are the UK's micro-generation champion. And I mean by that, solar on domestic rooftops, solar in individual business premises. We were one of the instigators of what's called the feed-in tariff scheme, which is the original UK incentive scheme for people to get rooftop solar. And we are major players in this market today, both in terms of services to people who already have that technology, but increasingly people who want to install solar panels, batteries, and indeed heat pumps in their homes and businesses. So we're an installer, we'll help you run the services, and that is the future focus of the business. We're also players in the electrification of transport, mostly through our investment in Zap-map. We're the largest shareholder in Zap-map, which is the UK's leading app for electric vehicle drivers. It helps them plan and pay for their charging on public charge points. So that's who we are. And I want to start with a macro level, a high level thought, which is the nature of your relationship with your energy company, which, let's face it, is not always a happy one for some people. Our service levels are very high. Anyway, the nature of your relationship with your energy company is about to change over the next 5 to 10 years. And that is because a lot more homes and businesses in the UK will begin to decentralise the generation of energy, electricity in particular, and will need to change the way in which they heat. And so we are facing into two what we think are very significant growing markets: the installation of solar panels and the storage that goes with them. There's some data there, but it's quite a big market already. It's just shy of £2 billion worth of business last year. It's growing quickly with the obvious stimulus that energy prices have unfortunately got very much higher, and we expect it to grow really at a sort of 10% or more rate through the rest of the decade, and it needs to grow at that rate if the country is going to get anywhere near its policy objectives around running a greener electricity grid. It's also growing, frankly, because the technology has improved. It's a better consumer product than it was 10 years ago. We also think the market for heat pumps is going to grow. Again, it needs to, about 35,000 installations in the UK last year. The government's target is to get to 600,000 by 2028. And without making that move away from gas towards the electrification of heat, the UK will get nowhere near its climate goals. So we think we're looking at two very significant growth markets, and that is why we've invested behind them. And we're investing behind a future consumer proposition, which this picture sort of simplifies, but generally speaking, the idea here is that for most homes, an electric vehicle is usually their first piece of green technology. There's about 1.6 million electric or part electric cars on the road in the UK now. If you get an electric car, you are 7 times more likely, according to Zap-map statistics, to want to get solar panels for the obvious reason that your trips to the petrol station have now become your domestic electricity bill. So we're a solar installer. Often the follow-on technology is then the greening of heating. We can do that through our heat pump installation business. And the supplier who enables people to wrap this together intelligently will be doing, I think, good business in the future, because to make this work, you need to consume energy flexibly and intelligently. You need to be generating or storing electricity when it's expensive. If you have a surplus, you need to be making a decision about whether to keep it or to sell it back to the grid. The technology is coming on stream to enable that, and we will be at the forefront of that move. And we think that is a good thing for consumers, because we can offer a sort of full service across green supply through to installing the technology. But we also think it makes for a good business, not only because these installation jobs are reasonably profitable in their own right, they make about 10% bottom line margin, but also because it means you can build the number of recurring revenue streams as you offer services to people with these technologies, buying energy from people who are generating from their rooftop, offering flexible ways of consuming energy for people with heat pumps and electric vehicles. And again, the company is focused on building those out. So let's take each of those elements in turn. Endless hours have been spent debating the nature of energy supply in the UK over the last few years. I'm sure more will be. We are a niche player. Okay, so the market has reconsolidated. There is a big six once again. We've spent billions as a country, and to end up back where we started, arguably 10 years ago. We are a niche player. We focus on genuinely backing all of the electricity we sell with 100% renewables. We appeal to green-minded consumers and businesses who want to demonstrate their carbon reduction credentials. And we are recognised as doing that. So we are the only supplier with all of our tariffs considered to be on the gold standard by Uswitch. For the last 3 years, we have been considered by Which, the leading eco provider amongst all of the energy companies in the UK. And we have a 5-star rating on Trustpilot. So we are one of only 2 energy suppliers with a track record of technology and training to back that up, to mean that we are hopefully more appreciated by our customers. In the business market, we don't sell to the big industrial commercial users. I'm not trying to power smelters or kilns. What we do is offer to supply the likes of PricewaterhouseCoopers, who have a real interest in demonstrating their green credentials, and we're the only supplier who can show you on an hourly basis how matched your consumption is against renewable generation. So as I said, the services side of the business is where we're focusing for growth. And we are, I think, the premium solar specialist in the UK now. And that is because we have recently bought and begun to integrate and brand as Good Energy 2 solar installers. They're based in the southeast and the south of England. And we'll touch on that in a minute. We're also an innovator in terms of the products and services you need to run this equipment once you've got it in. So we're the only people who will pay feed-in tariff customers, the original group of solar installers, based actually on what they generate and sell, as opposed to an assumed amount. So we are innovating in that marketplace. And we're innovating for people who've missed the feed-in tariff scheme. This acronym after acronym in the energy business, but the feed-in tariff scheme was closed by the Cameron government, as he felt it was an overly generous subsidy to solar panel home owners. The market then fell into very low rates for a while, and we are beginning to innovate out of it. And so our solar savings product will buy domestic rooftop energy at better rates than most other people in the marketplace. And here's a sort of visualization of what I'm talking about. There was obviously a lot of energy companies that want to install your solar panels. Some very well-known names in the bottom left of the graph there, which shows really the system size, smaller to larger, and the price of the installation. And as you can see, the businesses we own, JPS and Wessex are the trading names when we acquired them, tend to focus on slightly larger jobs, more complex jobs, which attract a higher margin. And that fits very much with Good Energy's traditional customer base, which tends to be that bit more rural and that bit more larger in terms of home size. So we're trying deliberately to offer a high service, highly rated offer. We don't, for example, subcontract any of the work. It's all done by our own teams, and we have, I hope, happy customers as a result. Same story applies in the heat pump market. In heat pumps, we actually bought a heat pump installation business from one of the suppliers who didn't make it through the energy crisis. And again, we focus on larger jobs. About 40% of the jobs we do are actually rural homes who are off the gas grid. And these are households who are coming off bottled gas or oil heating, which is a pretty poor product and also exposes the consumer to the spot market for some of these commodities. And they are becoming, sort of, for the first time, electric heat consumers. So we install heat pumps. Both of these businesses tend to operate around a 30% gross margin and about a 10% net margin. And finally, on the transport side, what do we do here? Well, Zap-map, which if you drive an EV, you will probably know of, if you don't, maybe not, is, at its heart, a data play. So we take data from public charge points, from people charging, from users who contribute all sorts of things, including photographs of where chargers are in the McDonald's drive-through that's nearest to my house. And we clean it and verify it. And Zap-map has three products, really. The app itself, used by electric vehicle drivers, is a subscription product when you want to use some of the more detailed functionality. It's a payment product, so you don't have to bother about separate keys or memberships or apps on your phone. You can just pay with your Zap-map account. Zap-map takes a clip of the charge. Zap-map Spark is an API. It's data. It's this kind of very hard to replicate data that will allow other people to license and build their own products. So FleetCor, who are the operators of the All-Star Fuel Card for fleet management purposes, their electric vehicle product is based on Zap-map's data. And we actually sell that data back to the electric vehicle industry. Because Zap-map is so widely used, it's the best source of data for how people are actually driving and charging electric vehicles, and Insights is the other product that Zap-map builds on the back of that data. And why do we like the story here? Well, because its market penetration is very strong. So if we go down that inverted pyramid there are roughly, as I said, 1.6 million cars with some sort of electric charging. Zap-map has been downloaded 1.4 million times, and it has a registered user base of 780,000 users. So roughly, you can bargain on high 70%, 80% market penetration of the certainly battery electric vehicle market for Zap-map, which is the basis of a very strong digital product, I think. That's the app itself. That's the sort of thing it does. I want to drive from London to Leeds. I have this sort of car. Tell me where to stop. Tell me, reassure me that I can use the chargers, that they're working. Tell me whether they're free. Tell me how I can pay. And if for about 25% of the fast chargers in the UK, you can then just go through and pay with your phone. So that's what we do, and that's the growth markets we're invested behind. Happily, we had our preliminary results for 2023 last week, so I can bring up-to-date financials into the room. So that is the last set of the last P&L. I think to draw your attention to, really, I think, first off, the revenue line. So it's a very high turnover business at the moment. Revenue and cost of sales are a function of the price of energy. So it will go up and down, and we are perfectly comfortable with that. We're not managing particularly for revenue growth or a gross profit figure. We're managing for overall operating profit. The big change, I think, year on year, and the greatest strength in the business was that at 7.1 million playing 1.9 million, was a year of real recovery from the energy crisis that the country has been through. So finally, we got into a position where we had bought energy from our renewable suppliers comfortably below where tariffs were at the start of the year, and we were running a more profitable business. A lot of focus when we gave the results, however, fell on the profit before tax line, which looks like a decline. It is, in black and white terms, a decline, but that is because in the prior year, we had a Series A fundraise for Zap-map. We had previously been a majority holder. We brought in a new investor and therefore realised a gain on that investment. So there's a one-off gain in 2022, which rather masks the underlying improvement in our operating profitability. We said to investors when we gave the results last week that happily the energy market is now more stable, and we would expect a more normal and sort of gradual and stable profile to the energy business from here. That's a visualization of what I've just really been talking about. So the reported profit in 2022, you need to remove the one-off gain from that to actually get to an underlying very thin year in 2022. That's when the energy crisis was really biting. What's then happened really is that actually consumers are using less electricity and gas. That seems to be a structural response to higher energy costs. However, our margins recovered substantially. That's because we had our wholesale energy market position, which had been spread over the full year and therefore wasn't subject to quite so much volatility in prices. We've seen some increased costs just through the P&L in form of investment in the services businesses, but an underlying improvement in our profitability, which we were very pleased by. And then finally, small businesses is often about cash. There's £41 million on our balance sheet at the end of last year. That's a very large amount, and some of that is legitimately cash we can use. 20 odd million of that is sort of firepower we can use both to underpin our energy supply business, but also make future investments. I want to be very clear, however, some of it is cash we cannot use. About 13 million pounds of that is our customers' direct debit deposits as energy tariffs climbed and climbed. So the amount of cash you take in from your customers grows with that. They begin to decline. At that point in time, we hold very high levels of deposit. We're actually in the process of hurriedly paying those back to consumers now. So we expect that to normalise. But even within that, we have a strong balance sheet. We have a small retail bond outstanding, but we have a very positive net cash position, which should enable further growth. But we don't quite wish to lay claim to all 40 million pounds of that. Some of that belongs to our customers. And so to wrap up and leave plenty of time for questions, I think Good Energy is a very exciting business. I'm certainly very excited to be its CEO. We are facing into important challenges for the next 5 to 10 years, important growth markets for the next 5 to 10 years. We have come through an extraordinary stress test in the face of the energy crisis the country has been through, and we've come absolutely out the other side in robust health. We do still pay a dividend. It's not a particularly big dividend, but we are reflecting the fact that some of our investors wish to see a dividend income as well as our investment for growth. But fundamentally, I think this is a business providing an important, social good for the UK, but also well positioned to take advantage of policy and consumer trends over the next 5 to 10 years. And I'll open up for questions.
Thank you very much, Nigel. Thank you. Okay, so straight away, a couple of questions. Pass it across. Thank you.
Thank you. You've been deathly silent on hydrogen. Could you tell me your attitude to that, please?
Yeah, sure. We're not fans, so I don't think hydrogen has a role in domestic heating in the UK whatsoever. You will have seen various attempts to get trials off the ground in Redcar and other places. People don't particularly want it. The physics of hydrogen into homes doesn't seem to apply. If hydrogen has a role in the energy transition, I think it is in sort of large transportation, as in container ships, potentially some aspects of buses. But we are avoiding hydrogen as a technology. We think that electrification is the way for us to decarbonise our heating network.
Question here, please. Yep.
Could you expand a little bit more on how integrated a business you are?
Yeah.
I mean, you mentioned you're in generation, supply and services. The reason I'm asking that is you mentioned in 2022 the profit level was lower than 23. But surely if you're quite integrated, it would have been a windfall year for given the very high price of energy. Yeah. You would expect, if you have your own energy, you have quite high margins.
So I suppose
that's my first question. And the second one is a more specific one is about the heat pump business.
Yeah.
How are you tackling the skill shortage issue?
That's a good question. So we are. Integration is gathering pace all the time in terms of what the consumer sees. So you will see an overall Good Energy branded offer of heat pumps, solar panels, storage and supply. That's actually been marketed and advertised right now in our target markets, which is sort of swathes of the southwest, south and southeast of England, not particularly London yet. We're not, however, vertically integrated in terms of generation into supply. So we owned a couple of wind farms and 5 solar parks, which generated about 15% of our electricity needs. We sold them in early 2022, and we sold them because they were only generating a minority of where we get the energy from, and there was a large amount of debt wrapped up in them. So for most professional investors looking at us, we've just seen a highly levered business. And so what we chose to do was sell them in a period of high prices, wiped out that debt, took the cash to invest somewhere else. So the way we're sourcing our energy is to sign what are called PPAs, power purchase agreements, with smaller scale renewable generators. So we're buying it off the farm who's got an anaerobic digestion unit in the corner, or a community energy scheme who've put solar panels on the rooftops of social housing in Bristol. So what you do, you lock your price in for a year when you buy that. So there's a bit of advantage in terms of high energy prices, but it's not quite the same thing. So we did have a bit of a one-off gain because a lot of those contracts have been struck before energy prices peaked. We're expected to normalise, and I expect what we said about profitability in the future was actually, look, because of the volatile nature of supply, we are trying to run a sustainable, stable supply business. Our investment in growth means that we think our profit from services, which is likely to grow and doesn't need the same level of working capital, for example, will pass our profit from supply by the end of 2025. So that's the target, and future years potentially higher level of profitability and more reliable sort of year-on-year profit growth from a services business than a supply business. On skills, it's a really interesting point actually for the UK overall. I mean, if you're a skilled electrical or heating engineer, you can put yourself in the top tax bracket pretty quickly, and yet there has been a bit of a shortage of specialist labour in this market. We are working with a couple of further education colleges where we've got a business, so in Chippenham in Wiltshire, where the company's head office is, to sort of sponsor people through apprenticeships and into the jobs, and that seems to be working. And again, if you're working, we're offering people a job where there's no subcontracting, they're all on staff, very strong sort of health and safety and training records. We are managing to attract the people we need at the pace we need, but I suspect it's a bit of an issue for UK PLC apart from anything else, but so far so good for us.
Question here, please. Yep.
Yeah, hi.
And then into the back corner.
I'm already invested in the FIT program, and that's something I did off my own back years ago, some 10 years ago. It boils back to your point about Cameron bottling it in 2018. And now the impact of the current government's decisions seem to be further regressing away and away and away from any sort of investment in any sort of green products. The timescale for you to grow as a company must be dependent on government cooperation. Can you give us your views on your relationship with government and how you see any contribution from government assisting in your growth?
Yeah, it's a great point. And I think a couple of thoughts there. One is, it's the most blinding piece of insight you hear all night, but I expect that we'll be dealing with a Labour government relatively soon on this matter. They've been somewhat silent on detailed policy, but they are proposing to bring back the deadlines for no new internal combustion engine car sales, no new gas boiler sales back to where they were originally set, roughly 2030. So that's a help, I think, and generally I'd expect their policy position to be more helpful to us. The actual one piece of government decision making over the last 12 years that's made a difference was the increase in the heat pump boiler replacement grant that came in last autumn. So whilst the current government pushed back the deadline for no boiler replacements, they did increase the incentive from £5,000 to £7,500 if you're replacing your gas boiler with a heat pump. And that did stimulate a bit of extra demand. And they managed to hold on to something else which is called the clean heat market mechanism, which is where they're trying to encourage boiler manufacturers to manufacture heat pumps. And they've pushed that back by a year, but they did at least maintain that scheme where it looked like they were going to drop it. So I think directionally a Labour government helpful. We're not counting particularly on any support here. Quite a lot of that demand I was talking about, it really just comes from the fact that, you were early in terms of the feed-in tariffs. Solar panels and storage are a better product now than they ever were, so they're easier to use, and most people can expect to get a payback over the course of about 10 years on it and feel as if they're making an environmental contribution. But businesses, bigger roofs, more predictable energy use, the payback, and we've got customers looking at 3-year paybacks on their solar installations. There's plenty of demand there. And heat demand is building just because some of the technologies we're replacing aren't very good.
Question in the back corner, please. Yep.
Hi. Yes, I think the last time Good Energy presented at AJ Bell's Shares Investor Evening, I think the share price went from £2 in October to double at the end of the year. So I wanted to ask what lay behind that dramatic rise, and can we expect the same sort of thing after this?
Well, depends if there's any high rollers in the room, I suppose. It's been really interesting 6 months or so for me. For many years, I would argue that Good Energy was sort of undervalued, and every CEO will tell you that, but I would sort of point to the cash on the balance sheet, the lack of debt, and therefore the relative small value ascribed to the business. And I would put that down to the fact that, like a lot of small caps, we're just in an unfortunate marketplace. We also weren't that well known in the retail investment market, and our liquidity was very low. And then we had pretty decent results through last year, which caught some attention. We're trying to reach out to more retail investors. And then something some of you may be aware of, which was Small Company Share Watch, picked us up as a share tip. And all of a sudden, the thing went off like a rocket. And there was an increased level of interest in us from retail investors, which, while it's a bit volatile at times, I welcome because liquidity is a good thing in the shares. A lot of people are seeking to draw a parallel between us and U Group, who are a B2B energy supplier. So they do something very different to us. The only parallel may well have been that they also were somewhat undervalued as the sector was in the doghouse and has come back. So there's a bit of sort of frothy speculation, but also increased interest in us as a share from a lot of retail investors, which I welcome, and we are skewing our investor communications to make sure that we cater for this group as well. And it's, as we're coming, I think most people feel now we're coming out of the energy crisis, and there's an interesting story to tell, and they can see that there are some growth drivers here. But where the share price goes from here, we shall see.
Nigel, will you be staying around for a drink or here afterwards? Are you guys going to be off?
I'm rushing out, but I'm happy to pick up questions offline. Really happy to.
Okay, well, if you have further questions for Nigel, please come bring them to me later. I'll send you, I'll give you my email address and you can send them in to me and we'll pass them on
and we'll
to
absolutely
Nigel.
answer that way.
That's been terrific. Thank you very much indeed for
Thank you for
joining us.
listening.
Thank you.